Okay, connection is a little bit patchy for me on my side. Okay. Okay. Hopefully this holds. And just waiting for the stream. Really sorry, guys. Okay, we'll get started. Just a quick general advice and risk warning disclaimer. Note that any advice given here is deemed to be of general advice, as the information or advice given does not take into account your particular objectives, financial situation, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products and thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are, for example, only. You are reminded that past performance is not indicative of future performance. Okay. I don't. If you guys can give me some feedback on the connection as well as the audio, that'll be great. But I do have a little bit of a problem on my side. I think my connection is a little bit patchy. Hopefully we can get through the night. Okay. First up, let's talk about sterling yen. I've actually prepared a few for today that I'm actually watching myself. But if you do have any requests and we haven't covered it today, do type it in. But we are going to talk about sterling yen, pound USD. We're going to talk about Aussie yen, Aussie USD, Euro USD, dollar yen, and gold. Nothing much on gold, but we'll talk about gold. Okay. Generally, we are going to take a look at all the yen crosses. Basically, that's going to be the main focus for tonight. In preparation for tomorrow morning in Japan, Bank of Japan monetary policy meeting. We don't expect any changes, but we do expect a little bit of their outlook change in terms of the inflation rate in Japan. We're also going to talk about the inflation numbers from Australia. That's keeping the Australian afloat today, and I guess that's great for some people. Okay, let's talk about sterling yen for a minute here. We do have a few support. We got 160, 159, and then we have a drop down to 157.25, and that's a huge drop to the downside for the sterling yen. Now, in terms of intraday momentum, it is potentially still bearish. The daily momentum still does look bearish. Let's talk a little bit about the daily first. Right now, if you are considering sterling yen, let's take into consideration that whatever it is doing right now, it's considered to be a technical correction. We do have support coming in at 159, but really we don't have anything between 159 to 157.25. So that's actually a big gap over here, all the way there to 157.25. So it is a huge gap. We are looking at about 175 pips to the downside if we lose support at 159. In the meantime, if you take a look at the momentum overall, we are looking at this, a little bit of support coming in with sterling. If you guys are wondering what's going on with sterling, basically there was a little bit of a shift in terms of the how many basis points hike in the year. It was actually 160 basis points in a year. It was adjusted down to 140 basis points by the end of the year. That was the consensus. This was changed. That was looking a little bit dovish on Bank of England side. Although Bank of England does mention that there's a potential for balance sheet reduction that's going to happen next week. Their wording is bond sales. That is probably at the same time with them hiking interest rates to 1%. That's the story with Bank of England. If you guys are wondering what's going on with sterling, why is it bearish? Why is it why is it not bouncing up when Bank of England's are hiking interest rates? It's a small little details here. In addition, we got the FOMC being super hawkish on one note. Okay, so sterling yen. What does it say on the daily? It doesn't really say anything. It doesn't really indicate that okay, it's time to buy in for long-term yen weakness and whatever not. At this point in time, it does still indicate that we could be looking at a potential weakness in sterling yen. Now, if you take a look at the hourly time frame, it is below the Ichimoku cloud. That's one. Second, it's actually forming a hidden bearish divergence. Now, in terms of correction, for the hourly correction, we are really limited to about 162. So I do want to focus on 162 as kind of the cap for the market today. If it stays below 162, then we are looking at a bearish scenario for sterling yen. I do expect a little, just at about 161.50 actually. Wow. Just got disconnected again. Okay, no, it's actually great. Okay, we got a hourly potential hidden bearish divergence now with a projected resistance at 161.50. Now, if we are looking at this, I'm actually limiting myself to 162. So if you are planning to go short on sterling yen, make sure your stop losses is above 162. Is it time to go in for a short? It depends. I think we are at around 161. We could bounce up a little bit towards 161.50. But if you do plan to go short, then make sure your stop losses are above 162. And in terms of downside target, just aim for 159 because we actually do see potential stronger support coming in at 159. Is that great in terms of risk to reward ratio? You're looking at a huge range. Okay, so I don't think this is for someone that's looking for a 20 pip stop loss, 50 pip stop loss. We're not going to be looking at a 20 to 50 pip stop loss. We are looking at about 120 pips of stop losses. We are also looking at a projected target at about 187 pips to the downside. Risk rewards are okay. It is above 1-to-1 risk to reward ratio, but make sure this is for you because the stop losses are huge, and I don't think this is for everyone. If you're not comfortable with potentially risking 120 pips, then yeah, I might want to sit this one out until we actually have stronger evidence that the correction is over. I don't think the correction is over yet. I've been looking at all the other yen crosses, and I think all of them are indicating about the same as the sterling yen. We could take a look at the euro yen. It's actually doing the same thing. The euro yen has started moving, but an hourly close below 135.50, that would trigger that. Right now, do note this is actually closing the gap early in April, early in the month. Momentum still points to the downside for euro yen. There's a lot of room to go, and potentially we could be looking at 134. Potentially even lower towards 133 because that was basically the previous significant high that was on the 10th of February 2022. Okay, so we could be looking at a projected move towards 133 on the euro yen. Right now, if you do want to go short euro yen, make sure your stop losses are at least above 136. Ideally, I want to have it above 136.50 because we are going to be looking at 134, 133 as a target. Again, I don't think this is for everyone, because you're looking at a minimum stop loss of about 100 pips just to be safe. You could be targeting 134 or even 133 on euro yen, but the overall strength on the yen this week in terms of the correction that's happening across the yen crosses, I don't think it's done yet. I think people are actually worried about what Bank of Japan is going to say tomorrow. I don't think they're going to intervene, but again, we're looking at a market that's actually risk averse this week. I think I mentioned that on Monday's Outlook. We are in that condition where market are actually risk averse. A lot of these risk currencies like the sterling yen, euro yen, I think people are actually staying away from it. The correction is not done yet. So if you're planning to go long on yen weakness, I don't think it's time yet. We could see that happen maybe tomorrow after Bank of Japan gave their talk about their monetary outlook. But at this point in time, I'm still looking at yen strength. I'm looking at continuation for sterling yen and euro yen. Again, it is risky. I mean, we're talking about 100, 120 pips here in terms of risk. So again, let me just remind you guys, it is not for everyone, but the outlook is there for euro yen and sterling yen. Just make sure your stop losses are adjusted right. Don't give it like 20 pip stop losses. It doesn't mean anything, because right now for euro yen, the minimum stop loss is at 136. I want to have it at 136.50 or above. I think that's much more realistic and much more ideal. For sterling yen, your stop losses will be beyond 162. You can have it at 161.50, but there's still a potential that price could actually go towards 161.50 before progressing any lower. So the choice is yours if you want to jump in right now or you want to hold up until 161.50. You might get the trade, you might not get it. Okay. All right. Okay. Right. VIX. No. Okay. I'm really having a bit of an issue with my connection. It's just on and off. It just keeps dropping. But we'll go on. We will talk about VIX. It is going to be above 32 at this point in time, so very risky in terms of risks in the market. In fact, we'll actually look at. No, it's definitely me. So yeah, I do apologize for the connection. No, it is my connection. Because I'm looking at this, my streaming software, it just goes green, red. So yeah, I do apologize. Okay, yeah, I think we should talk about VIX before we go on to all the other yen crosses. So here's VIX. If you guys are new and are wondering what VIX are for, we are looking at VIX as a volatility index. This is the Chicago Board of Exchange volatility index. If it is above 19, we consider it to be more of a risk averse market. There's a lot of risk involved. Right now, this one jumped back up above 30, projected to be opening at 32. So we could potentially see more risk in the market. I don't think this is done yet in terms of momentum for the VIX. We could see. Okay, just give me 1 second, guys. Okay, so yeah. Okay, well, we are doing this in English. That was a nice try, really nice. Okay, anyway, let's focus. Let's talk about VIX. I know this is blurry to you guys, so I'm gonna read it out. Right now, VIX could be opening at about 32. If it does open at 32, then sorry, VIX is actually opening at 31. But if it crosses 32 again, then we could be looking at a potentially, more risk averse market. Now, is that bad for us as a trader? I don't think it's bad. I think it's actually great. It's just that there's a lot more risk involved. There's a lot more volatility involved in the market. But at least market is moving, right? I don't really quite care if it goes up or down, as long as it's actually moving, and we can take a look at measured risk in terms of where it's gonna go. That's what matters. Now, VIX is up. We'll take a look at the dollar index later when we talk about the US dollar and stuff like that. So let me just go on to the Aussie yen, because this is unique. I think I mentioned this on the outlook on Monday. We do have support between 90 and 91. Now I'm looking at on the daily chart right now because I need to kind of give you guys a guidance on what's going on with the Aussie yen and the rest. So sorry guys, I'm just checking my connection. Wow, it's so bad. Okay, so yeah, with the Aussie yen, we have stronger CPI numbers. That was inflation number, if you are not familiar with it. The year-on-year numbers for the first quarter went up from 4.5% to 5.1%. The quarterly CPI numbers jumped up from 1.7 to 2.1%. Sorry, the consensus. Now, what's important is actually the trim mean CPI. Now, this is actually the trim CPI or the core CPI numbers, if you are not familiar with the word. This is the preferred way for the RBA to decide whether inflation is high or not. Now, the forecast, I believe, was at 1.2%. We got a trim mean CPI of 1.4%. Now that's basically what's keeping the Australian dollar afloat. Okay, now if you take a look at the Aussie yen, the drop is not as drastic. If you take a look at how far the correction is, we're probably looking at about 38.2%. In terms of correction, we're still way above the Ishimoku cloud. In terms of momentum, this one has gone down much quicker than the sterling yen or the euro yen. Now, what does it say with the Aussie yen? Does it necessarily means okay, it's gonna bounce back up? No, because if you take a look at that range between 90 and 91, we haven't even reached the 90 level yet. So we could potentially see the Aussie yen drop towards 90 before bouncing up again. Now, if you take a look at the hourly time frame, this is actually a hidden bearish divergence. I think this is confirmed. Let me just double check. It is confirmed. We do have a lower high on price, and then we have a higher high on the stochastics. So we do actually have that, but the range is not huge, right? I mean, if we take a look at this one, if you want to go short on this one, stochastics has actually already crossed, so just make sure your stop losses are above 92. In terms of target, you could be targeting 90.50 or 90. I would prefer to have it at about 90.50 to 90.25. So yeah, you can have it at 90.50. That's going to give you about 83 pips in terms of potential targets, and then about 70 pips as potential risks. This is already on the go. I don't expect a huge movement below 90 at any point tonight. We could have that if there was a surprise announcement from Bank of Japan. But right now, we are looking at support to come in at 90 to 91. In terms of range, we're not looking at ridiculous range like in sterling yen or euro yen. If it breaks certain support levels, then we don't actually have a lot of support. For Aussie yen, we are looking at 90 yen and 91 yen. Ideally, if you want to target this one, go for 90.50 or 90.25. But that's pretty much it. Again, this is not for everyone, because I know a lot of you are probably long Aussie yen. Just to remind you what the CPI numbers are, so you guys have an indication of what's going on with the Aussie. The Aussie yen is not as weak as the sterling yen or the euro yen, so keep that in mind. Okay. Next up is dollar yen before we move on to the Aussie USD, Euro USD, and then pound USD. The dollar yen. So let me give you a preview of what the dollar yen is. I don't think we need this fib, but if you have that fib, that was basically from the 28th of March to the 31st of March. We are actually stuck at 200%, 129. Okay, I'm gonna clear it off because we don't need it. That was the cap, pretty much at 129, and then 129.50. Intraday transition above 128 to 128.25. That's the key level to watch out for, which is above the Ichimoku cloud. We are likely not going to transition that. Okay, so yeah, dollar yen. My note this morning was looking at 128, 128.25 resistance cluster. We haven't seen a break above that 128, 128.25, but that's pretty much here. So this is going to be your intraday resistance. We are at the upper limit right now for the dollar yen. So I know the US dollar is strong and whatever not, but if you take a look at the whole yen crosses across the board, I mean, we have the sterling yen, euro yen, Aussie yen. Now we got the dollar yen. If it does close above 128.25 on the hourly, which is a little bit hard to do but not impossible. If it does break above 128.25, then it could progress higher towards 30. Oh, sorry, 130. Okay, but it requires a break or a confirmed close above 128.25. Sorry guys. Right now, in terms of intraday pivot, we are looking at 127.50, but range is pretty much 127 to 128. Nothing much. Do you prefer to go short dollar yen? This is a different scenario from the euro yen or the Aussie yen or the sterling yen. We do know the dollar is strong. We'll take a look at the dollar index in a minute, but we do know the dollar is strong and remains strong. The euro and the pound, we'll take a look at that in a minute. We're actually trading at a 2-year low. We're looking at the pandemic lows for sterling yen, the sterling and the euro. So dollar yen, it is very risky to go short dollar yen because if we take a look at the range, it's actually between 127 to 128. That's the intraday range, which is just 1 yen, right? It's very risky to go short dollar. It is within the Ichimoku cloud, at least on the hourly time frame. I much prefer this one closes above 128.25. If I don't see that happen, then I'll wait for it because tomorrow it's going to be lower. We just need to close above 128. So yeah, I think this one is actually going to trade within the Ichimoku cloud. But if it does break above 128.25, then we could actually see a push higher towards 130 for the dollar yen. I just don't see it happening yet, at least not now, with the hourly time frame within the Ichimoku cloud, unless it stabilizes above 128. But then it'll be, the UK market will be closed by the time it happens. You're getting less liquidity, so there's actually a lot of risk with this one going into what Bank of Japan is going to do tomorrow. So I might want to sit out the dollar yen. I prefer to take on the Aussie yen, sterling yen, and euro yen. I think there's a lot more volatility, a higher probability compared to shorting the dollar yen. I think there's a lot of risk involved if you are planning to go short the dollar yen, because overall, with the dollar, we take a look at the dollar index. This one is actually trading above the 100 on the index. I think I mentioned this last week that we are looking at 101. Right now is actually pushing above 102. potentially going towards 103. I don't see any sign of weakness yet. I know the stochastics looks flat to you, but this is trading above the 80 on the dollar index, so I think there's a lot more. There's still strength left behind in the dollar index. I don't think it's time to be shorting the dollar. Next up is, it's the reason why we're looking at sterling. This is just super weak. Now let me zoom out a little bit. I think the connection is good now, so I can zoom out and show you what are these lows that we are focusing on. We are looking at price breaking the 23rd of September 2020 low yesterday. Okay, next up we have good trade balance. Trade balance negative for the US, doesn't matter, not that big of an impact. Okay, we are next looking at 18th of May to the 9th of June 2020 low. That is pretty much about 1.25. Now if I were to round this up between the 1.2250 and 1.25, I think I'm going to take a look at 1.25 and pay a lot more focus on it. This is a key psychological price level. Okay, so 1.25, that's going to be a key level for the pound USD. So I'm going to get rid of this fib because it's irrelevant. I don't think we have a fib that extends to that support there. So we are actually relying on previous support levels, which is about 2 years ago. So I'm going to get rid of the fib. We don't need that. You can keep 1.25. Whether or not you want to keep 1.27 is up to you, but you can adjust it to 1.2. I like to leave it at 1.2675 actually, because it's also a psychological price level. But here's the thing, the hourly doesn't look great. If you take a look at how big of correction it's done, 2 drops, right? I mean, we have 2 cycles. It basically didn't even get past 23.6. So in that sense, we are extending this lower. Now, if you take a look at the resistance that I drew, 1.2675, that becomes a 23.6%. Now, this is not going to hold. I think we are going to be looking at support to come in at 1.25. But for those that are planning to go short, just be a little bit cautious with 1.25 because price could actually be trading like that and just move sideways. Okay, unless we see a complete clear cut of 1.25 today on the daily, then we have further confirmation that this could progress towards 1.2250. But at this point, if you are planning to go short, be a little bit more careful with this one. I know we are looking at dollar strength and whatever not, but we are just so close to key support level of 1.25. If you go short, the risk reward ratio is not going to be 1-to-1. It's not going to be pretty. And there's going to be a rate hike coming in from Bank of England. I think it is scheduled for next week, but let me just double check. Pretty sure it's next week. Is it next week? Yeah. It's next week, Thursday, Bank of England monetary policy decision. They're hiking rates from 0.75% to 1%. That's a 25 basis point hike. That's projected to come in on Thursday. And at the same time, they are potentially announcing their bond sales, or basically their balance sheet reduction, at that meeting next Thursday on the 5th of May. That would be after our webinar next week anyway. Plus you got NFP next Friday. Okay, let's go back. So sterling, be careful with sterling USD. This one here, if you are planning to go short, make sure your stop losses are above 1.26. I'm not saying this can't go any lower. It could go lower. I'm just saying be careful of 1.25. If you see price is it's hard to break below 1.25, then just be a little bit more cautious, because I look at the order books and there are a lot of orders line up at 1.25. So either stop losses are going to get hit or people are actually going to pick pound USD at 1.25. So we don't know what's going to happen yet, but there's a stronger outlook that 1.25 is a strong key support level that a lot of people are going to watch for. And people are actually going to be eyeing for that for any bounces off 1.25. So for this one, I'm actually sitting out on this one. I'm actually going to be waiting if price gets near or closer to 1.25 and what is the price reaction around 1.25, because if it does break below 1.25, there's not a lot of support until 1.2250. In terms of range, obviously that's going to be about 250 pips, right? So think about it. If it does break below 1.25, then yeah, it could go to 1.2250. If you go short right now, what if price is unable to break below 1.25? Then you need to be careful, because for those that are going short pound USD, just take a note of 1.25. If it's hard to break, then be careful and get out of your short trade. Other than that, it should be okay if your stop losses are above 1.26. Okay, so just a quick note, I'm not saying it's not right to go short. Momentum wise, it is saying it should be short. I'm just a little bit more cautious with the 1.25 level on the pound USD. Now, I'll take a look at the chat in a minute, but I want to focus on the next one with the Euro USD. Again, let me zoom out. So you got some key levels there. We just break one. That was, I believe, the low on March 2020. So if you think the break just now wasn't significant, a lot of stops were basically triggered. This was taken out because we just broke below the March 2020 low. Now, if you're wondering, there's another line down there. How far does this one go? I actually need to go into the weekly to find that out, because we are looking at a January 2017. Now this is a 5 years low, and that was basically the next support for Euro USD. We just lost a lot of support for Euro USD in terms of how significant the support that was just broken. That was a pandemic low. Okay, that was basically on the outbreak of COVID. We lost that support. Right now we're looking at 2017 support, and that's gonna come in at 1.05. Again, 1.05 is a key psychological price level. But if you take a look at the hourly time frame, I don't think there's anything significant until 1.05. Now, it's not much. I mean, in terms of how soon it's going to go there, it's only about 50 pips away. So, yeah, you could go short right now. You might have been short. Now, if you're wondering where your stop losses are going to be, your stop losses are unfortunately going to be above this, above 1.0650. That's about there. In terms of target, yeah, that's how much you can be aiming for. Risk reward ratio doesn't look pretty. You're risking a lot more. So if you're not already short Euro USD, then just wait for the break below 1.05. If you're short Euro USD, make sure your stop losses are above 1.0650. Okay, and if you're going short, just make sure that you are on the lookout for 1.05 because that's a key psychological support level, and that was basically the 2017 low for the Euro USD. Risk reward ratio, not that great. So unless you're going short already, or you plan to go in for an intraday trade, that using a 50-minute stop loss, even if you go on the 50 minutes, your stop losses are still going to be about 56 pips. So it is still a risky trade. So just be on the lookout for Euro USD on this one, okay? Gold doesn't There's nothing much on gold. I don't think there's anything much on gold. We are just hovering around 1900. Um, all the key levels are pretty much the same as last week. I know this is a little bit messy. I'm actually planning to get rid of this fib because we don't need that. We have a much bigger fib that we could be using. Right now we do have support coming in at 1900. But 1895 to 1900 is your support to focus on for today. That's basically going to be the pivot. More downside expected with stronger support at 1825. Now you got cluster support between 1875 to 1850. If you're thinking about going long gold, think very carefully. This is actually below the Ichimoku cloud. I much prefer for this one to wait out for the momentum to turn around. Price unable to break through above 1910, and yeah, go back down. But that's basically the kind of scenario that we're looking at here. There are still range or room to go to the downside. Stronger support wouldn't come in until 1825, so it's still very far down. Okay, how many candles do you wait to decide that it's hard to break support or resistance? Usually, now we take a look at the pound, for example. Put it simply, it shouldn't bounce off more than 3 times. If it starts bouncing off more than 3 times, you should be careful. There's no right or wrong answer to this one, but just be conscious of what level you're looking at, because right now with pound USD we're looking at a psychological level, right? I mean, it's 1.25. That's $1.25. Obviously it is a psychological support level. It's not just a whole number, it's actually part of a quarter. So a lot of people are actually watching for this one, 1.25. Is it going to be strong or not? Put it simply, if it starts bouncing off more than 3 times, then you should be careful. That's one. The other one is the momentum that you need to be cautious about. What if this one goes down and then this one goes up, and then price just bounces off 1, 2, 3 times? Okay, it just stays flat above 1.25. To put it simply, if you want to see a significant break or not on any key levels, I much prefer to look at it from the daily perspective rather than the hourly perspective. If the daily closes below it, then great. The problem is with the hourly perspective, we could see the price going below 1.25, for example, and then creates a wick, but the daily actually closes above 1.25. So if you want to know if a support level or resistance level is strong, it should be able to reject the daily candle. I don't like looking at a key level like this one from the hourly. That's why I said I'm actually sitting out pound USD. I'm actually going to wait for the daily to actually bounce off or close. So it's either price breaks down below 1.25 and then closes above it, or it closes below 1.25. That would give me a better guidance than just looking at the hourly time frame. So yeah. Is the market still driven by Russia, Ukraine? It's there on the back of our mind. I don't think it is right now. I think market is really driven on what the FOMC was saying, how hawkish they were, and how close it is that they're gonna be hiking that rate soon, right, in their May meeting. That's in 2 weeks' time. We got Bank of England next week. I think a lot of focus are actually on the interest rate outlook. We got Bank of Japan potentially intervening because how weak the Japanese yen is. Is it done? I mean, Ukraine, Russia, is it still driving the market? Oil market is still driven by it. So if we take a look at oil, I'm not going to talk about oil because there's nothing much to talk about oil. But if you take a look at the oil market, this is still driven by that. This is still very, very choppy. We're still maintaining a position above 100 on Brent. On US oil, it is still above 100. It's still high, right? This could be driving inflation even higher. So at the end of it, is it still affecting the market? Yes, to a certain degree, it is still affecting the market. Uh, Look, there just no major news coming out of it, right? It's not as big as when the war started. When the war started, it was a surprise to everyone. I mean, like, this kind of time and age, and people still go out and conquering, trying to conquer other countries. That's basically a shock, right? And how Russia was attacking the nuclear power plants, that was a shock because it was just a nuclear risk. So those kind of news, that's driving the market. But put it simply, if something major happens and the media blows it up again, that's going to impact the market again. But right now, this week and last week we got our earning calls, this quarterly earning numbers. This week we've got Apple, Microsoft, Amazon, and Google, I believe. And then next week it's just rates, right? So that's basically what's going to be driving the market. Any view on Bank of Japan tomorrow? I don't think they're going to say anything. I'll be honest with you. I don't think they're going to say anything. It's just not in Bank of Japan's. It's not how their economics work. It's not how Japan works, right? I think my career was basically shaped by Abenomics. That's basically it. So we kind of refer to it on how the Japanese economy or the Japanese government is taking a look at how they want their yen to be. Is it bad for them? It's kind of bad. The only concern that a lot of people actually have right now is because oil prices are high. If oil prices are not high, Bank of Japan wouldn't even care about potentially intervening in the market. There were talks about Bank of Japan talking to I believe it was Yellen, which was just a rumor, but it was it was out in the market that Bank of Japan was rumored to be talking to the U.S. Treasury Secretary for potentially intervening in the market together. That's not the case. Bank of Japan has come out. Sorry, not Bank of Japan. The finance minister, I believe it was Suzuki. I believe. I'm not clear on this one, but yeah. They came out. They said no, it was just a rumor. It wasn't true. So, any hints of Bank of Japan tomorrow? I don't think they're gonna be saying anything. I don't think it's in their interest to be intervening in the market. They might remove the yield cap. That's the only thing that I'm concerned about. I think a lot of people looking at the yields on the treasury side. I think what we're concerned about is that the cap is going to get removed. Now, if the cap gets removed, then the yen could potentially strengthen. Are they going to remove it tomorrow? It's hard because it's hard to say that because they remind the market twice that the cap is there. So it's hard to believe that 2 weeks after they remind the market, they're just going to remove it. So I don't think that's going to happen either. So yeah, market's just worried about the potential risk, but honestly, I don't think Bank of Japan is going to intervene. I don't think Bank of Japan is going to remove the yield cap. I don't think Bank of Japan is going to do anything tomorrow. The only thing that they're going to change tomorrow is probably their inflation outlook. Because of how fuel prices are going up, they might change the outlook to a higher inflation outlook. But it's just not in their monetary policy to be tightening their monetary policy. They're still easing up their monetary policy with the yield cap, so I don't think that's going to get removed either. Okay, can one set to take profit on a trade and ignore setting the stop loss? If stop loss is not set, what could be the implication of the client's trade? Henry, here's the problem. I think for every trade, when again, it depends, right? I know some of you guys probably don't believe in stop losses and whatever not. the way I look at the market is this, and the reason how I survive for this long is because I look at the risks and the potential gains, and I compare it before I jump into the market. If I were looking at Euro USD just now and the Pound USD, I was mentioning that, risk to reward ratio isn't great, right? Because I've kind of figured out where my stop losses are going to be and where my take profit is likely going to be. Now, if I don't set my stop losses, you know what's going to happen? The implication that it could have to you is that this market could go up beyond your stop losses, and you're actually scared to close that position because you're hoping that the market is going to go back down again. It does go down for a little bit, and then you feel safe. You don't want your stop losses. Then it goes up even higher. This was the case. I believe someone was here. I don't know if it was last week or if it was 2 weeks ago. There was about a 500 pip. Is that about 500 pips? 1.1125. No, about 400 pips of floating loss. And the guy just kept on holding on to it because he or she doesn't have a stop loss. So the implication is that it's gonna ruin your trade. You're gonna get margin called. I don't know what your equity is, but you could get margin called and you don't even know why it happened, right? That's one. Number two, psychologically, it's not great for you because you're basically not thinking about the risk that you could have in your trades. So again, I'm not telling everyone to use your stop losses, but if you ask me the implications of not thinking about the stop losses, I think there's a lot more risk involved if you trade without a stop loss. Now, if you are trading without stop losses and then you get stopped out, or you won't get stopped out, but you could get margin call, and then you go around complaining to people, oh, it's risky. Well, maybe this. A lot of traders just don't think about the risks, right? They think about the gains. They just never thought about the risks. They could be thinking, oh yeah, I should go in short right now. I don't know how far my stop losses is. I don't know the risk. Now, if I remove that, it'll give you nothing. Then every trade is just going to be a great trade because you never thought about the risk. But if you put the risk into something visual, and then you can take a look at this one and compare it. Oh yeah, the risk reward ratio is not that great and stuff like that. Okay, we're so close to key levels. Maybe I shouldn't even worry about 1.25, right? I should go for, let's take a look at the 2020 low. Just aim for 1.2250. Now, does it look great? Yeah, it looks great. But when it comes to trading, is this, does it look realistic to you? If it doesn't look realistic, then it's just common sense to think that the trade is just not realistic. It's not viable. Okay. How do you determine your stop losses and your take profit level? There are a lot of factors to determine stop losses and take profit levels. By the way, we're going to the Q&A session. So let me give you a guideline. One is that you could be using your previous highs, right? Like this one here. That the market is going down. Then those are going to be your stop losses. But where are you going to be targeting? What are you going to be targeting? Because we don't have a previous low that we could be looking at. That's why we took that 2020 low for our stop losses, and that's how far we have to go. We just broke that, so we have to look further. What's beyond this, right? So we scroll, we try to figure out what's going on, and then we have this. Those are going to be your lows. That's basically that and that. So those are your January and February 2017 lows. Those are gonna be your target levels. That's one way to do it, right? If you're figuring out how to determine your stop losses or your target level. Now, let's say you got your target levels. The next thing to do is just make sure that it makes sense, right? I mean, if you go for the January low, we're looking at price going to 1.03. 1.03, 50 to make sense to you, because to me 1.04 is more realistic. In terms of stop losses, I need to put it up here because the market dropped so quickly. I basically need to have my stop loss above 1.09. Is it worth the risk? Because you're risking 381 pips for 150 pips gain. Obviously, it's not pretty because you're risking a lot more than your potential gain. Okay, so this trade obviously cannot be taken on the daily. It can be taken on the small time frame if you want to. Because on the small time frame, we got a smaller stop loss. Right? You could be using this as a stop loss. That's only gonna risk you 100 pips, you know, and target could just be the same at 1.04. That's just one way to do it. The other way to do it is obviously using Fibonacci's. But if you're not familiar with Fibonacci's, don't use it until you are clear about it. We could talk about Fibonacci in the next session if you guys want me to. Then we could, you know, I could actually do half a session just talking about Fibonacci, just so you guys have a guidance in terms of using fibs as your stop losses or your take profit levels. Could be a great idea. If you guys want that, then do type in the comment so I know what to do for next week. I can prep the time, you know, I can set aside half an hour to talk about Fibonacci's. We have talked about gold, so if you can review that after this, that would be great. Assuming no major announcement by Bank of Japan tomorrow, will Japanese yen strengthen or weaken? I'm more on the Japanese yen being weak because we have seen a correction happen this week, so it has been strengthening. If Bank of Japan doesn't announce anything hawkish, it would be considered that Bank of Japan has confirmed themselves to be dovish. Therefore, the yen will likely going to weaken again. We could see a bounce off sterling yen, euro yen, Aussie yen, but whatever not. Until then, we don't have that confirmation. That's why we took a lot of time talking about the yen crosses tonight. But yeah, I think a lot of people, a lot of traders, a lot of yen traders are just waiting for what Bank of Japan is going to say tomorrow. Again, we don't expect anything major. They could announce anything every week. It's just that tomorrow they have their monetary policy meetings. It could be a great time to announce the rumors or talk about the rumors that's been going on in the market, that they could be intervening in the market, blah blah blah, if dollar yen gets to 130 and stuff like that. So a lot of stuff there. Okay. Euro pound, okay, I got a short position ongoing at 0.8446. My target 0.841. Okay, see, for example, Dora is using fibs, so Henry, you know, we could be using fibs and stuff like that. So yeah, let's take a look at Euro pound. Euro pound short position ongoing towards 0.841. Right, hourly I assume, and this would be the fib. Yes, 0.84. Yeah, this one, yeah, I think should be great. Do I think it can go lower than that? Don't push it. Put it simply, can it go lower than that? If we do have that bounce off the sterling at 1.25, then yes. If euro breaks below 1.05, then yes. So I'm gonna just type it out, right? It could potentially break lower on the pretext that GBP USD bounce off 1.25. Okay, and euro USD breaks below 1.05. So that could happen. The move down towards 83.75 could happen on the pretext that pound USD does this and the euro does that. Okay, So can it go down? Yeah, it could potentially go down because if you take a look at the stochastics here, this is just dipping below the 20 level. It could stay below that 20 level for a while. Okay. Right. How about this? Next week we'll set. I'll put a note out to Octa FX as well, just to let them know that next week's session, if we can put something on the title, we'll talk a little bit about Fibonacci as well. So I'll spend about half an hour talking about it, and then half an hour talking about the market. Hopefully that's gonna give you guys that's just starting out at least some kind of guidance to what to look at in the market. You short gold 1906. Should I try to hold it until Fed raise interest rate or just take the profit? Stop loss plus at 1905. So you short at 1906. You already moved your stop loss to 1905. Should you take it? Not really want to advise, but it's still gonna be about 2 weeks before Fed hikes rates, so it's still far off. And it's not driven by the fact, yeah. It's driven by the rumor. So far, it's driven by the rumor. I think there's still room for this one to go. We did talk about gold, and that's a potential scenario there. If it's at 1906, then I'm actually looking at a move towards 1910. We could see price hit 1910. The ideal stop loss shouldn't be at 1905. It should be higher. But I mean, if you secured $1 as a profit, then I would actually move it lower, because if price goes up to 1902 and above that, it could trigger a higher correction. But yeah, if you want to leave it at 1905, I think it's okay too. You also put your focus would be on 1895 and 1900. That's just support that you need to be focusing on. In terms of resistance, we actually don't have anything until 1920. It's too early to call 1905, and I'll be honest with you, 1905 means nothing, because I could draw 1905 for you right now, and I'll just highlight how 1905 is not important, because price actually goes up above 1905, back below 1905, and up higher again. The significant level to watch out for is not 1905, it's actually 1910. So if I give you 1910, then there's only one instance it actually pokes through 1910, and then got rejected below 1910. So yeah, and the choice is yours. I mean, you already locked in some profit anyway. Even if you live it, you're still gonna walk away with $1 in profit. Should you be taking it out? I don't know. That's really up to you, because right now, what is your target level? See, if you have a target level, then go for that target level. I mean, you adjusted your stop loss. Obviously, you have a target level. So if you want to stay around for that target level, then it's completely up to you. Okay. All right. I do apologize for the inconvenience, for the connection problems. That'll be great. Thanks, Mr. Filbert. Okay, I do apologize for the connection issues. We were okay about half an hour, but half an hour in, we were patchy. I do apologize. Hopefully the recording comes out okay. And if you want to review the recording, this is what we talk about tonight. We talk about sterling yen. We talk about sterling USD. We talk about Aussie yen. We talk about Aussie USD. We talk about Euro USD. We talk about dollar yen. We talk about Euro yen as well, and then we did talk about gold as well. Okay, so that's it for this week. Good luck with your trades. Don't forget that we got Bank of Japan tomorrow, and then next week we have the UK interest rate hike, and then the NFP and ADP numbers on Wednesday, Thursday, Friday. So yeah, it's a jam-packed week, and I know some of you are probably on the holidays. Depending on where you are and what religion you have, you might have your holidays next week. So in any case, enjoy your week.